What's going on, everybody? Late night crypto talk. Bitcoin Brandon here. We're going to get started in just a couple of minutes. What's going on, Charles? What's going on, Lashana? What's happening, Benita? Good evening, Anthony. I am behind. Sometimes news happens so fast it's hard to keep up. That's why we got to do 2 crypto talks a day. Always be learning. Always be learning. I'll say it again. Always be learning. I read this morning that Venezuela is giving crypto education to their people for free. That Vladimir Putin has already stated that they cannot afford to be behind on this new technology, that they must lead the way. It is happening worldwide, ladies and gentlemen. Whether you like it or not, whether you understand it or not, and like gravity, whether you believe in it or not. You don't need to believe in gravity for gravity to work. That's how it is. It is what it is. Your opinion doesn't matter. And as before I begin, as I always state, I am not a licensed financial advisor to be dispensing financial advice. I share my opinion. I give out, read the news, give out my suggestions. You take that information. You do your own research and you make your own informed decisions. What is a cryptocurrency prime directive? How you survive this space. Rule number 1, get educated. Rule number 2, never invest with money you cannot afford to lose. Rule number 3, get your ROI back as fast as possible. It's usually between 2 to 4 months, no matter what it is you're doing. And rule number 4, have a game plan, a plan of attack. Know where you want to be in 30 days, in 6 months, in 1 year. Figure out what you need to do to get there and stick to the plan. Don't get distracted. Very easy to get distracted in this space. I see it every single day just by watching people on Facebook. They are all over the place. So don't get distracted. And if you follow those prime rules, you will limit your risk and you will come out on top. Yeah, I like that, Doug. An exit plan, but when you have an exit plan, I call it having a plan B, a plan C, and a plan D. You always got to have multiple backup plans to backup plans and diversify yourself. Here's one free nugget that you'll get in our Cryptogenics training. Have more than one Bitcoin wallet. Never put all your Bitcoin eggs in one basket. Have them dispersed. So, Doug says, can I list the rules? I don't know. Where do you want me to list them? I mean, this is crypto. I can't be like Martin Luther and nail the 95 Theses to a church door. I just share it every time I speak. You want to write them down somewhere. I got them in all my videos also. You follow those rules, you will be able to navigate the crypto waters very safely. You missed them. So the rules again, I'll say it again, for those of you that's come on late, and you can always go back and listen to this again from the beginning. Rule number 1, education. Education. You must be educated in this space. I spent months educating myself before I invested a dime. And when I did invest, I only started with $100. Well, can I count the trading? Yeah, because I started trading before, and I only started with $30 there. Turned $30 into $600, turned $100 into a small fortune. That's what I did. Education. Number 2, never invest with money you cannot afford to lose. I should not be seeing you on Facebook crying that you lost your life savings because you got in a deal and they did an exit scam, or it didn't work out, or the company got shut down and you lost all your money. Even though I can empathize with those people in those situations, I don't sympathize with them. There's a difference between the two words. I empathize because I feel your pain. I do not sympathize with you because it was avoidable. You got yourself into that situation. So never invest with money you cannot afford to lose. You risk big, you can lose big. Number 3, return on investment. Don't get greedy. Don't be like you go to Vegas. You know that old saying that house always wins at the end of the day in Vegas? You know why? Because they know human nature. You might win a little bit. You might, get some good things at the blackjack table or whatever. But instead of cutting your losses and walking out the door, you think you're on a hot streak. Oh, you never continue to win. Eventually, you're going to lose. And then what happens with people, then they lose, they figure, oh, I need to make that money back I just lost. Let me go in on this one. Let me get in on this one. Let me get on that one. Thinking that you're going to recover what you lost, and you keep losing, you keep losing, you keep losing. The house, not only did they make all the money they gave you back, but they also made all the money you gave them. House always wins. Don't have that mentality in crypto. It's okay to take a little profit. I had one guy that we both got in on a trade, right? Because I was in a group and they were talking about it. And the trade was going up. They projected it to go up to, you would make about 7%. I got to about 3.5% profit, right? And I looked at the charts and I was like, well, the green candlestick is above the top Behringer bar. I think it might have had its limit. It could continue to go up, but the Behringer bar is now starting to turn down. Even though it's still going up in the green candlestick. I'm like, I'm going to take my profit now. And I pulled out. And they laughed at me. Well, my boy laughed at me because I got a 3.5% profit. And he was going for that 7%. You know what happened? Right before it got to 7%, the sucker dropped. And by the time he figured out what's going on, he ended up getting a 2% profit. Some people ended up getting a loss. Because they were trying to time it right to get it right at the top. A profit is a profit. All right? Take your profit. Don't get greedy. All right, so let's get into... Oh, I didn't finish the rules. Return on investment. And then number 4 is have a plan. Have a game plan. And with your game plan, be focused on it. It's not about you have to just join one business. That's not what I'm talking about. I'm talking about, it's sad to say because I don't like him right now. It's the Warren Buffett mentality with Berkshire Hathaway. Is Berkshire Hathaway invested in every single Fortune 500 company on the stock market? No. They have a formula. And he sticks to that formula. Even if there's a new, the best new company coming out to get in on the stock, Berkshire Hathaway won't do it. They stay focused on their plan. Don't keep up with the Joneses because of what somebody else does. You know, that's good for them. You stick to your plan, what's good for you. All right, so now we got all that out the way. Here's a cute little story that just popped up a couple of minutes ago. A 6th grader writes a 57-page book about Bitcoin. It caught my attention because I have a 5th grader. My youngest son is 10 years old in 5th grade. And he is around me 24/7, so he is hearing everything that I talk about when it comes to Bitcoin. In fact, he's in the room with me right now. Go ahead, Donovan, say hi. Say hi so they can hear you.
Hi.
Now he wants to speak. So, his little brain is acquiring all this information, even if he may not understand it yet. But it just got me. The 6th grader wrote a 57-page book about Bitcoin. And let me put this in the chat box. This wasn't scheduled. It just popped up for me. So an 11-year-old named Andrew Corey from Massachusetts just published a book on Bitcoin so the younger generation can grasp this emerging technology that's been sweeping the globe. The 6th grader considers himself an expert on Bitcoin, and his 57-page book describes cryptocurrencies in a way his peers can understand. This little kid, by the time he's 15, will be a multimillionaire. I predict. Before he hits 15 years old. Andrew Carey is a middle school student from Massachusetts, and he hopes to earn $20 million by the age of 14. Corey made an agreement with his parents, who said if he earned... He just said he wants to earn $20 million by the age of 14. Donovan, you hearing that? This kid is 1 year older than you. While you're playing Minecraft, he's writing a book on Bitcoin. He says he's going to be worth $20 million by the time he turns 14. My wife just walked in here. Let me let her know this. There's this 11-year-old kid in Massachusetts. He wrote a 57-page book on mastering Bitcoin. He plans to have $20 million by the time he turns 14 years old. He's 11. And we're looking at our son right now who's playing Minecraft and he's 10. He's got the intelligence to do the same doggone thing. Alright. So, he made an agreement with his parents, who said if he earned $20 million by then, he could drop out of school. Much like Bitcoin millionaire Eric Finman's deal with his parents. So after countless hours of research, also, alright, when you look at little kids, you got to get what's going to motivate them. This kid is motivated by never having to go back to school again. So, from the mouth of babes, they don't have it's impossible mentality. They just see a problem and figure out how to solve it. So, after countless hours of research and YouTube videos covering the subject of Bitcoin, Curry decided to write a book on the topic. The book called Early Bird Gets the Bitcoin. That's cute. The ultimate guide to everything about Bitcoin. It's available on Amazon in both ebook form. Alright, I'm buying this book. I'm going to have my son read it. Yeah, you can read 57 pages. Yeah, I'm going to get this book. Early Bird Gets the Bitcoin. Because this knowledge, this information is so important towards your future. Not just for us, but our kids. Because they're going to grow up in a world. Like, we grew up, I'm 41 years old. So the 90s, when I was really, coming of age, high school, college, finding my wife, getting a kid. In the 90s, Oh man, I love the 90s. I wish we can go back. This culture today, this mumble music, whack movies, besides Black Panther. Black Panther was awesome. But the 90s were awesome. But we only had the internet at that time. In fact, email was brand new. Remember America Online? Remember the .com craze at the time? See, my generation grew on that. It came on us with that one. But these kids, this generation, they're growing up with Bitcoin, with blockchain. It's a complete different world. And if they want to survive, if you guys have children, they must know this. This is, Donovan, this is not debatable. You will read this book.
What?
This is must knowledge for their future. I like that. AOL always overloaded. So the introduction states, today we will be learning about an online currency created by Satoshi Nakamoto, and by the end, you will become a master of Bitcoin. We need to hire this kid for cryptogenics. Know what I'm saying? This kid needs to be on payroll. Corey's dad is a tech investor and prompted Andrew to put his studies to good use by publishing a book about Bitcoin in a more simplified manner. Anyone can learn about cryptocurrencies if they're willing to spend 70 to 80 hours researching every source until they find a couple of sources that make sense. Let me stop right there. All right, I did a special Facebook Live Saturday night answering a question from people who say, why would I pay $250 for cryptogenics to get educating on crypto when I could just go to YouTube and get the knowledge myself? Here's another reason why. Do you want to spend 70 to 80 hours researching every source until you find a couple of things that make sense to you, and you have to try to figure out what is real and what is not, what is legitimate and what is not? Most people don't do that. I know, because I get every day at least 5 to 10 questions in my inbox from people who ask simple questions. It's not simple to them, but it's simple to me. Like, where do I go to buy Bitcoin? Is there a limit to how many Bitcoin I can buy? How come it takes so long for Bitcoin to get to my account when I paid for it? What is two-factor authentication? What is a hardware wallet? Where should I store Bitcoin? Is Bitcoin the only coin out there? Are there any other coins that's better than Bitcoin? Etc., etc., etc. It's a non-stop thing. And in my early days, I was happy to answer these questions because I had newfound knowledge. And you know how you are when you learn something new. You want to get out there and, you want to put it to use. So I was happy helping people. But then it got overwhelmed. It got overwhelming. 90% of my day was spent answering these basic questions. And so you know what I started to do then? I said, you know what? If you go to YouTube and type in that question, an answer will pop up. And people got upset with me when I say that. I don't want to go to YouTube. I know I can go to YouTube. I want to go with somebody that I trust. I trust you. I know you know what's going on and I can ask you a question. That simplified right there is why people ain't going to YouTube and why they're going to pay money to use cryptogenics. This kid spent hours upon hours upon hours. So did I. And it doesn't stop. I spend 2 Facebook Lives a day where I'm still learning. But if you're working a 9-to-5 job, or you're a single stay-at-home mom or dad, or you're running 2 or 3 businesses, you've got a whole lot of money to invest, but you don't have time to put in the research to know exactly where to go and where to put your money, that's what cryptogenics is for. To have a trusted and a structured learning environment where we sift through all the BS and give you what you need to know. That's why. This kid just did it right here. We need to put them on payroll. The whole book, in the simplest terms, is very easy to read and simple to understand. This kid, he's going to be a multi-millionaire. I would hence to say he's 11. He'll be a billionaire before he's 30. This kid. His mind is already on track. And I don't have time. I got to say this. There is something called the law of attraction. Laws of the universe. We are what we think about most of the time. We attract what we think about most of the time. Think about that. I mean, in the 90s, all I thought about was girls. What you think I attracted. That's all I thought about. But right now, you are what you think about and attract to you. And at 11 years old, this kid is thinking about blockchain. He's thinking about Bitcoin. He's thinking about the technology, the currency. So when he's going through his day-to-day and opportunities pop up that a normal kid might miss because it's not on their radar screen, it is on his radar screen. He's going to be able to pick up. Let me use it in layman's terms. Women, have you ever been in a situation where you go into a store, you buy the perfect pair of shoes, and then after you buy it, you're walking through the mall, you see other people got the same doggone shoe you just bought? Or you buy a brand new car, and next thing you know, you're on the freeway, and you see other people with the same car you are. You're like, where'd that come from? Everybody wants the car I got now. No, they were always there. You just weren't tuned in to notice. That's exactly what's going to happen to this kid. He's tuned in, and why I'm going to make sure my kid is tuned in, whether he likes it or not. He ain't going to have a choice on this because it's for our future. He's going to be, him and his brother are going to take over the Ivy Empire from what I do, and then it's on to them to expand upon it, so they need to understand. So let me continue here. I'm spending too much time on this because this wasn't the topic. Relatable analogies. The sixth grader's book tries to use relatable analogies to describe cryptocurrencies and blockchain technology. In order to explain a distributed ledger, Corey explains that a blockchain is similar to a public Google document that's shared with everyone and that can only be edited by buying or selling Bitcoin. Additionally, Corey says a digital currency wallet is comparable to a mailbox, where only the owner has the keys. Corey describes a Bitcoin wallet in his book, noting, imagine there is a mailbox. The mailman can drive the mail to any mailbox, but only the person with the key can access the mail. I mean, dang it. He's an 11-year-old, and he's writing this where an adult is going to be able to understand. Jeremy, put him on payroll. This kid wrote a 57-page book on Bitcoin, and he's in the 6th grade. The book covers concepts like wallets, mining, and other technologies tied to cryptocurrencies. Moreover, the book discusses the history of Bitcoin, initial coin offerings, and the Ethereum protocol as well. The Ethereum protocol, that's in our advanced section. And this 11-year-old's got it figured out. At the end of each chapter, Corey concludes with a fun fact about the specific subjects discussed in that section. I will be ordering this book before I go to sleep tonight, because I'm going to read it myself and I'm going to give it to my kids. All right, that was a bonus. Wasn't on the docket for tonight. So I got to cover what I forgot to cover this morning. Bank of America. I don't know if you guys could tell, but I'm real hyped tonight. Why? Just got off a call earlier with some of the top leaders of our business. What we've got coming, I'm so excited about. I mean, I've never in my career been in this position. So we're going to make the most of it. So, Bank of America acknowledges the threat posed by cryptocurrency. Interesting. That's a non-brainer. We all knew that banks feel shocked or threatened by it. So here's what they have to say. For all the inroads that Bitcoin has made on the current financial system, it has yet to threaten their ascendancy. The CEOs of PayPal, Visa, and other legacy payment systems may have been monitoring the rise of cryptocurrencies, but they have not been losing sleep over them. Now, in a frank report to the SEC, Bank of America has acknowledged a range of threats that could affect its hegemony, and one of them is cryptocurrency. So pay close attention here. When they feel threatened, they lash out. Bank of America tells it like it is. The widespread adoption of new technologies, including internet services, cryptocurrencies, and payment systems, could require substantial expenditures to modify or adapt our existing products and services, writes B of A. Its annual report to the U.S. SEC is a dense and dry document that is filled for regulatory purposes. This year's submission contains a few interesting tidbits for Bitcoiners, for it makes mention of cryptocurrency 3 times. B of A, which was founded in 1904. Someone asked, what business? Oh, you guys, if you're just listening, what I've been talking about for the last 2 months, cryptogenics. We go into pre-launch very, very soon. That's the business. And the only main focus I have right now. So I answered that because people are sending me messages asking, what business? More than 25 countries at launch, people. The languages have been translated, voiceovers and everything. Oh man, I'm excited. All right, B of A, which was founded in 1904 under the moniker of Bank of Italy, has over 200,000 employees and recorded revenue of $87 billion last year. Like all companies subject to the regulatory oversight of the SEC, it is compelled to provide an annual report that details its financial health and outlines potential threats to its business model. We face significant and increasing competition in the financial services industry, it writes before conceding, a few sentences later. Clients may choose to conduct business with other market participants who engage in business or offer products in areas we deem speculative or risky, such as cryptocurrencies. It is the third and final mention of cryptocurrency that is the most intriguing in Bank of America's 90-page report. It writes, the widespread adoption of new technologies, including internet services, cryptocurrencies, and payment systems, could require substantial expenditures to modify or adapt our existing products and services. We might not be successful in developing or introducing new products and services and reducing costs in response to pressures to deliver products and services at lower prices or sufficiently developing and maintaining loyal customers. Let me break that down in layman's terms. They're scared to death. They're basically saying they are not sure they're going to be able to keep up and compete with what Bitcoin and other cryptocurrency services are going to be able to offer because we don't need the banks anymore. We don't need them anymore. Now, Bank of America is also not stupid. Bank of America has over 45 blockchain patents, or as they call it, distributed ledger technology. They're planning an entire infrastructure around cryptocurrency, but cryptocurrency they can control like the Fed coin. They're not, don't think that they are just going to take this laying down. This doesn't mean that America's second largest bank is running scared of crypto. But the very fact that it is acknowledging their impact and their potential to disrupt the banking sector is a modest milestone at least. The bank's attitude to Bitcoin and its ilk is unclear. But as news.bitcoin.com recently reported, Bank of America has filed more cryptocurrency patents than any other company. Of course, that statistic does not mean it is poised to start trialing its own blockchain technology. Nevertheless, if major banks were to reduce their charges in response to competition from other payment systems, including cryptocurrency, many Bitcoiners would consider that a small but satisfactory victory. Hell yeah, why am I going to pay all these fees to Bank of America when I can get it far less doing money transactions with crypto? I mean, this article says it. Bank of America made $87 billion profit. You're a bank. Your job is to take and hold our money. But most people don't realize, what does the bank do with your money once they get it? They make money on your money. They jack you up. They pay you, or they charge you for the right for you to put money in their account for them to take your money and make money on. And then they'll pay you a meager 1 or 2% for the year on your money. We don't need them. And they're scared to death for it. I'm looking at the time. Okay, I got the last thing I want to cover is, and there's actually 2 articles about this. Poloniex. Poloniex is the very first exchange I learned how to trade crypto on. It is the exchange I took $30 and turned it into $600. Very easy to understand for me. Most people like Bittrex more, but I use Poloniex because that's what I learned on. So cryptocurrency exchange Poloniex has been bought by Circle. The other article on this, let me see, where is that? I opened it up. Poloniex, the 6th grader. Oh, I didn't even talk about Turkey. Okay, I'm going to have to wait till tomorrow. Turkey or the quantum computing. Yeah, that's a whole nother one. Yeah, CCN put in Goldman-backed Circle acquires crypto exchange. That's important news. We know what Circle is, but who owns Circle? Goldman Sachs. So Goldman Sachs is now in control of a crypto exchange. Is that coincidence? I think not. So let me read this first article first. Let me put the link in the chat box. Goldman Sachs is about to make a power move. They figure, why create our own when we can go out there and buy one? They could just buy one. All right, payment company Circle has announced that it has purchased Poloniex cryptocurrency exchange. Rumors of the acquisition have been circulating for weeks and were finally confirmed today in press releases issued by both parties. Poloniex is one of the most well-established cryptocurrency exchanges, but has been stagnating. It is hoped that the partnership will revitalize its fortunes while bolstering Circle's presence in the crypto market. When the story of Circle purchasing Poloniex surfaced on an obscure site called Modern Consensus, it was shot down as fake news. It turns out the story was accurate, and the news was very real. Circle and Poloniex accelerate the emerging token economy, reads the headline of the press release. Circle issued on February 26, 8 a.m. Eastern Time. Circle is already invested in crypto via its Circle Trade app, but Poloniex connects it to a main artery at the heart of the crypto ecosystem. Yeah, in other words, it's giving them now access to dozens of other crypto coins. There's a lot of talk of tokens in Circle's press release, including the phrase an open global token marketplace. It's evident that Circle has big plans for Poloniex and will be taking a hand-on approach as it seeks to enact its vision for the soon-to-be revitalized exchange. These plans clearly extend beyond disabling the troll box that was one of Poloniex' defining features. Circle talks of improving customer experience. I like that. Something Polo is notoriously bad for, as well as risk, compliance, and technical operations. Old exchange meets new money. In crypto terms, Poloniex is an OG. You guys know what an OG means? I don't think I have to go into that. Having been around since 2014, It's managed to avoid succumbing to any major hacks in that time, which is an achievement in its own right. Any updates we make in the course of this transition will be behind the scenes and focus on strengthening user experience, platform performance, and security, explains Poloniex. Your funds will remain safe and access to account functionality uninterrupted throughout. The press release finishes by speaking of exploring options for fiat connectivity. Fiat connectivity. Blockchain.info is doing that as well. Across major world currencies, not just the US dollar. And access to innovative token projects that extend cryptocurrency protocols to new use cases. In the last year or so, exchanges such as Bittrex and Poloniex have largely been eclipsed by newer entrants such as Binance and KuCoin. The former pair have failed to innovate, and traders have been forced to take their business to exchanges willing to list the latest tokens and cryptocurrencies. Poloniex still carries great weight, however, and is the 14th largest cryptocurrency exchange based on trading volume. In the last 24 hours, $139 million was traded on the U.S. exchange, with Bitcoin and Litecoin accounting for 37% of the volume. With Circle now pulling the strings, there is every likelihood of Poloniex reestablishing itself as a dominant global exchange. I'm glad to see that because I like Poloniex. But I also want to go behind the scenes on this. So I'm going to pull up this second article on this I'm going to read. I'm going to see if there's a difference. Here's one habit that I've learned to do in the crypto space. I'm subscribed to multiple crypto news sources. And throughout the day when breaking news happens, they all cover it. It's kind of like watching MSNBC, CNN, and Fox News. And if you notice, one event could take place. All three of those news sources will cover the event, but you'll get three different versions of the event. You're like, hold up. It's the way they interpret the facts. You would think facts are facts, right? Oh no. Based on your belief, you can make those facts turn into however you personally believe. So I do not only read one source in the crypto space, because sometimes when I read these things, I know that they're wrong. I recognize this person doesn't have all the information, this author. So I like reading multiple sources. So let's read the same exact news from a different source, and let's see if there's a difference. The first difference that I find is that they mention Goldman Sachs. That's very important information not to leave out. So the other article not once did it mention Goldman Sachs. All right, so let's go on. Former Bitcoin startup Circle has acquired US-based cryptocurrency exchange Poloniex. Circle, one of the earliest and the best funded startups in the Bitcoin industry, has announced its acquisition of Poloniex, one of the world's largest cryptocurrency exchanges. In an announcement, Circle co-founders Sean Neville and Jeremy Allaire stated, "We're proud to announce that Circle has extended its commitment to a new vision for global finance by acquiring Poloniex, a leading token exchange platform." The co-founders outlined a handful of objectives, taking immediate priority, underlining enhanced customer experience, market expansion with additional support for cryptocurrencies, and, most importantly, retaining the features and services already on offer at Poloniex. In 2015, Goldman Sachs was the lead investor in Circle's $50 million funding round. Circle notably received New York's first ever BIT license in September 2015. A European expansion followed after earning an electronic money license, the first Bitcoin company to do so. In Britain, came in April 2016. All right, let's read between the lines here. Goldman Sachs, once in on the entire crypto industry with ETFs and futures contracts. They're in the banking world as well. So, when you see a move like this, all the article talks about is Circle. But the real news is Goldman Sachs. That's the real news, not Circle. Circle is a puppet. Circle's doing what they're supposed to do. But always find the man behind the money. Who's really pulling the strings here? And what do they have to gain? So what would Goldman Sachs have to gain by their subsidiary purchasing one of the largest crypto exchanges in the world, Poloniex? That can lead you to making assumptions on the path, the future path of Goldman Sachs. Now, as I stated at the beginning, I am not a licensed financial advisor. But what I would say is pay close attention to anything Goldman Sachs does, and you might want to invest in it when it comes to crypto, because they now have their own freaking exchange. You guys see that? You got to be able to read between the lines. Now, the negative side of that is Poloniex is a US-based exchange. And with the new tax laws in place, fully expect all exchanges in the United States who want to operate here to do exactly what Coinbase did and report all findings to the IRS. Expect to be getting 1099s from the exchanges. Could Goldman Sachs be using this as a way to further the crypto goal? Or are they going to be on the side of the bankers who want to kill cryptocurrency? Or not kill it, but regulate and control it. Make it as much centralized as possible. This could be a step if that is their goal. I don't know. I'm only making assumptions. All I know is the story is not that Circle bought Poloniex. The story is that Goldman Sachs owns Circle. That's the story. What are they up to? Follow the money. Follow the money trail. All right, guys, that's it. I have not eaten dinner yet, so I'm about to sit back, eat dinner, and watch my Monday Night Raw. Since we just had Elimination Chamber last night, I want to see what Ronda Rousey's about to do tonight. And I'm going to relax. We had a very, very busy day. So I hope you guys learned something new. I strongly advise, if you did not listen to the Facebook Live this morning where I talk about Russia, you want to do so. Vladimir Putin is on point. He is on his game. He said this: the Stone Age did not end due to the lack of stones, but because new technologies appeared. He also said, if we do not take the lead on this, then we're going to be subject to whoever does take the lead. This is the new industrial revolution taking place, the fourth. And the United States is not taking the lead. Russia is. And the other countries are falling like dominoes. I didn't get a chance to read this tonight, but Turkey is now proposing their own cryptocurrency, which means, who do we have now? Venezuela, Estonia, Russia, Turkey. Oh, there was another one. Where is it? I hope I didn't close it out. China. Oh, man, I think I'm going to have to go back and look at it. China is contemplating. I was wondering how long that was going to take. Their own cryptocurrency as well. And so is the U.S., the Fed coin. So anyways, this is exciting times to be alive, but don't be a spectator. Get in the game. And it starts with education. So with that, thank you guys for listening. I'm going to go eat. See you all tomorrow morning or early morning crypto talk. Bitcoin Brandon out. Bye-bye.
Cryptogenic.